don't buy the Bitcoin ETFs unless you do it in a tax-advantaged retirement account. Why would I say not to buy the Bitcoin ETFs, particularly when I'm buying them myself? Well, the reason for this is the way that they work. Bitcoin has many features that are tied to the cryptocurrency. However, there are two specifically that I really like. The first is that Bitcoin is easily portable. Unlike other currencies like cash or gold, it doesn't take any physical space. All you need to do is remember your wallet or have a hardware wallet, and you can take almost any amount of money out of the country without anyone knowing. It is portable in the event of an emergency where you need to leave the country and you need to have a lot of money on hand. The second is that Bitcoin is not confiscatable. Even if somebody knows what your address is, they can't access any of the Bitcoin you're holding unless they have your keys. If you're investing in the Bitcoin ETFs, you don't get either of these benefits because the ETF is just exposed to the price of Bitcoin. In other words, you're buying a stock, and then the stock itself is holding the Bitcoin to make it worth what it's worth. However, if you can buy the Bitcoin ETFs in a tax-advantaged account like a Roth IRA, the situation completely changes. With a Roth IRA, all of the contributions you make to it are made post-tax. In other words, you pay all the income tax on whatever money you put in, but you don't pay any taxes on any of the money you take out in retirement. This means you could buy the Bitcoin ETFs, and if Bitcoin goes from $35,000 all the way up to $1.5 million like Cathie Wood thinks, you don't pay any taxes on any of the gains that you've been exposed to through those ETFs. Personally, I have no intention of ever selling any of the spot Bitcoin that I hold, but I do want exposure to that potential upside, and to be able to do it in a way where I wouldn't have to pay any income taxes on those gains is positively huge. So that's why I'd say only buy the Bitcoin ETFs in a tax-advantaged retirement account. Otherwise, just go and buy spot Bitcoin using one of the brokers that are out there. Whether you use Coinbase, Gemini, Robinhood, just buy spot. Sure, you'll need to make sure you get a hardware wallet so that you can transfer your Bitcoin off of the brokers. Do not trust any broker to hold your Bitcoin, but you'll get exposure to all those benefits that Bitcoin brings. So let's say you do want to invest in the Bitcoin ETFs because you're going to do so in a tax-advantaged account. There are more than 10 to choose from. How did I pick which ones I wanted to invest in? For me, there are two top priorities. The first is how much is the annual fee, and the second is how reliable is the company that backs up that ETF. What I did was look at my account and decide what percentage of the account do I want to allocate to Bitcoin. Once I figured out what that amount was, I divided it between two different ETFs. The first I picked was Bitwise's BITB. Now this one has the lowest annual fee of any of the 11 ETFs at 0.2% annually. I do trust Bitwise, but in comparison with some of the other players on the space, they're really new. And it's always possible that something unbelievably unexpected could happen and an ETF could get liquidated. Because of this, I took my other half and I put it into BlackRock's ETF with the ticker symbol IBIT. BlackRock's annual fee is slightly more expensive at 0.25%, but BlackRock is one of the biggest institutions out there that manage investments. The likelihood of their ETF going upside down is probably the least of any of the ones I could choose from. After that, I don't buy all at once. I decide that I'm going to put a certain amount to work, and then I buy that relatively quick, almost right away. But then I save the remainder to buy in stages on the way down, because you never know when Bitcoin's going to sell off. I'd been warning readers of my newsletter for weeks before the ETFs were approved that every investment instrument that had ever been approved for Bitcoin was a sell the news event. When the Grayscale Bitcoin Trust was approved, Bitcoin sold off. And when the Bitcoin futures were approved in 2017, Bitcoin really sold off. The futures were approved in late December of 2017, around $11,000 a coin, and Bitcoin sold all the way off to $3,128 by the end of 2018. An epic sell-off. So even though a lot of the Bitcoin bulls were predicting a God candle, in other words, a jump of $10,000 to $12,000 or more in a single day, I was skeptical. But that being said, I still wanted exposure, so I did buy the ETFs on the first day. I just controlled my quantity. When you're talking about investments this new, it can be very difficult to figure out price action because you have no past price action. So a simple way to buy in stages is just to pick a certain amount you want to put to work every time Bitcoin sells off 5% or more. If the ETFs sell off 5%, you buy some. If they sell off 10%, you buy some more, and so on. If Bitcoin bottomed and ended up rallying before I had all of the money I wanted put to work, I'll just buy at higher levels. This is an asset where I have more than a 20-year time horizon before I even plan on taking any for retirement, so I can buy up my cost basis because I'll have more money to put to work as time goes on. Another thing you can do to figure out price action is to use something called Fibonacci retracement. I'm using TradingView right now, but most charting software will let you do Fibonacci retracement. All you have to do in TradingView is to hit Alt-F, go to the bottom of a move, and then the top of a move, and you'll see that it gives you different kinds of price levels that it might find support at. But Fibonacci retracement goes even lower and shows you other potential levels of support that an asset might find when it's selling off. This isn't a guaranteed science, but it gives you a general idea of targets that you can do. And if we pull out on the scale, you can see that it gives us even more targets where it thinks that Bitcoin might find support just based on the move of the first day. However, now that the Bitcoin ETFs have been trading for a little while, we have even more price action. And so what you can do is draw Fibonacci retracements from the low of a move to the high of a move. In other words, where it found a bounce and pulled higher. And this will give you even more price targets that you might be able to use to add to the position. Just like with any technical analysis, there's no guarantees that any of these support levels will hold. So I never put all of my money to work. I'm always prepared with cash on the sidelines to buy at lower levels. And like I said, if the ETFs do bounce from these levels and go higher, I'll just put more money to work when it pulls back a little bit. Like I said, this is in a retirement account, so there will regularly be contributions being put into that account, which means I'll have more money to put to work in the ETFs. I started trading Bitcoin in 2017, and I took the biggest loss I've ever taken in more than 25 years in the markets when Bitcoin crashed more than 85% from its high to its low in 2018. Want to know what lessons I learned? Check out this video here.